Welcome back to FT Markets. It's a busy week for currencies with lots of economic data and central bank meetings. We thought it would be helpful to provide a guide to the big themes going on in the major currency markets. With me to discuss these is Roger Blitz, who's our foreign currency correspondent. Roger, welcome. If we wanted to simplify things, simplify your life at least this week, it's basically at the core a dollar story going on. We have our first chart showing the dollar movements so far this year. Start of the year, very much story about a rally. Then we had this dip. Seem to have recovered a bit from that dip. Now, are we back into dollar rally story?
Well, it certainly feels that way. Janet Yellen, the Fed Reserve Chair, has made it explicitly clear that if interest rates are going to rise this year, it's going to be on the back of data, and we're in the midst of a large amount of data culminating on Friday in the non-farm payrolls, which is the key benchmark.
They're going to be a key guide to pace of activity, therefore whether the Fed can raise rates or not.
Yes, she was talking up the idea of a rate rise this year in a speech a couple of weeks ago, and what we've been seeing is some of that data starting to look good. We clearly had quite a poor first quarter GDP in the US, and now we're starting to see what is the second quarter looking like.
Of course, this is now implications for other major currencies. The yen, for instance, the yen, stronger dollar, much weaker yen. Is it just a dollar story or the Japanese factors there as well?
There are some Japanese factors. We have seen Abenomics kicking in and the
attempt to get inflation going.
And the quantitative easing program is still being pushed along. But broadly, we've been looking at the breakout of dollar yen being on the back of a lot of the US data.
A slightly different story with the euro, though, because the euro was weakening on quantitative easing. But we've had some quite positive economic data, haven't we, with in the eurozone, including inflation higher than expected this week.
And that's going to carry on. And clearly, one of the factors is for investors is where do they see this tug of war between the stronger European data and the quantitative easing program, and the quantitative easing program, which way do they switch? And we have seen the euro going back and forth on the currency scale.
Yes, okay, and we've also had, of course, in the eurozone quite a lot of bond market volatility, which has also presumably had its impact on the euro movements.
Yes, indeed, and that is likely to play out for a while. I think a lot of investors have been glad to see some of the volatility in the bond market ease off, but expecting what is the next volatility going to look like.
Okay, but we're not expecting great announcements from the ECB this week, I don't think, are we?
No, I think that's going to remain pretty much where we are. And so the Bank of England also has a rate policy announcement, and that is also going to be pretty much stable. But we're also having a lot of UK data, which is affecting sterling.
Well, let's come and talk about the pound sterling, which has been buffeted by all these competing forces we've been talking about on global currencies. If we look at our chart, interestingly, what happened after the election at the beginning of May was we saw quite a strong relief rally, didn't we, on the election by unexpectedly of a Conservative majority. That's now fading.
It's fading because of continuing focus on Brexit and the Cameron campaign to look at whether he can get concessions out of the European Union. There are talks going to be coming up on that. We're starting to see the shape of a referendum bill from the UK.
But is that really Brexit driving the pound down recently?
Again, we have to look at where the dollar is influencing its currency partners, and again, the US is pushing ahead. And one of the factors about about cable, which is the US UK currency pair, is who is going to be raising rates first, and the UK is seen to be lagging the US by about 6 months, and that is why we're seeing what a lot of currency experts are saying is going to be the continuing fall of sterling against the US over the next few months.
Roger, we're back where we started with the dollar, which is probably a good place to stop. Thank you very much for that view of the world very briefly. So a crucial week there with the US non-farm payrolls in particular on Friday, giving an indication about how the US economy is doing and whether the Fed will go ahead with its plan to raise interest rates.